Hello viewers. Uh, my name is Pawan. My channel's name is Racks to Riches Awesome Finance. So today topic will be on majorly on the inflation and which is the best. The topic will be about not only about the problem which is inflation. What are the other things uh, which can be useful to beat the inflation? So, so it will be a good session. I would like to share a slide which I've collected the data from past 1995 till 2022. So that data which I'm going to share now. And in that slide, I mean, you will have some other things also. I'll explain one by one. So let's start the screen which I was talking about, which has the data. So this is the one which I was talking about. So here you can see the headlines. I mean, if you see Nifty 50 performance versus fixed deposit and versus the gold performance. For a few minutes, let's forget about this headline and we'll see the other things, which is if you see the first one is inflation. So I'll talk about this first now. So what it is saying, inflation, average inflation from 1995 till 2022 is 6.72%. It means uh, in this particular year, I mean from 1995 till 2022, there were different periods having different rates of inflation. Let's assume that starting from 6%, it touched up to 28%. Okay. So the 28% is the highest which India has seen ever. Okay, so I'm not saying it will fall in this 1995 to 2022. So that is the high I'm saying. So if I average those years, so 27 years average, it comes to 6.72%. So now what happens is, I mean, 6.72 average, it is per year, every year. So for example, it's compounding. It's not simple interest. Like, I mean, if you might say it is simple 6.72. Okay, it is not like that. So it is, for example, uh, in the year 1995, the inflation is 6.72, and next year is again 6.72. So it has increased from the 6.72. It is not that it is on. I mean, it is a 6.72 every year. It has increased. That is why we call it as inflation. So, for example, I have given a simple example here. In the year, if you had 1 lakh rupees, the things what you could have bought in same 1 lakh rupees, that in 2022 you should have given 5,78,944 rupees. So this inflation has devalued the currency. It means so the so for it is for a simple example which I have shown here, every 1 lakh rupees at that time, whatever you are able to purchase, you are not able to purchase with the same amount, right? So it has increased 4,78,944 rupees. You are paying extra to buy the same amount of uh, uh, goods, which is 1 lakh rupees. So it means if you have 5,80,000 rupees in your bank account, it does not mean that it is 5,80,000. It is only 1 lakh rupees you are having. You are able to get it. So this is how the inflation is happening. So this is how we are, though we are seeing the amount, but it is not the exact value of that. So this is the major part which I wanted to share with you. And now I'll come to so this is the problem. Okay, now there are three solutions which I'm showing here. One, say I will come to the Nifty later. So I'll talk about the easiest part, which is everybody can understand, is fixed deposit, right? So fixed deposit is like, for example, suppose if you have invested, it is simple. I mean, I don't want to get into more details. So I've taken the average of interest rate from 27 years average is 7.5%. I don't want to complicate this because everybody knows it. So, for example, you invested 1 lakh rupees at that point of time in 1995, that would have become 7 lakh 4,739 rupees, right? So it's average 7.5%. Even if you compound it, it will become 7 lakh 4,739 rupees. So the interest what you earn is 6 lakhs 4,739 rupees, right? Your 1 lakh plus 6 lakh 4,739, that comes to 7 lakh 4,739 rupees. So if you, that 1 lakh rupees, whatever you have invested in the year 1995, in the year 2022, it will be 7 lakh 4,739 rupees, right? So now I'll just see inflation. So as I told you this as, so I'm just comparing it, okay? The same 1 lakh in the 1995 is currently it is 5 lakh 80,000. So 5 lakh 80,000. I make it as a round figure. It will be easier to make you understand. So it is 5 lakh 80,000 in 2022. So the how much you have earned? I mean, including the capital, it is 7 lakh 4,739 rupees, right? So the interest what you earned is 6 lakh 4,739. But here there is one more catch. So this interest amount, whatever you earn, there will be a taxes when you have to pay, right? So depending upon the slab, I mean, it starts from the 10%. And by, see, for example, 27 years of this thing will be around, let's say 20, 25, 20%, you can take it as an capital, I mean, sorry, it's a tax, income tax you have to pay. So for example, so 6 lakh 4,739 into 20%, right? So that comes to, let's say, 6 lakh 10,000, 6 lakh 5,000 will make it as 605 into 20%. It is 1 lakh 20,000. So you are not going to get 6 lakh 4,739 rupees. Means, let's assume that the capital including it is 7 lakh 4,739 minus 1 lakh 21,000. That comes to 5 lakh 83,000. So it says that 1 lakh has become 5 lakh 83,000. Okay. And the inflation is 5 lakh 80,000. You have earned only 3,000 rupees extra or maximum 4,000 rupees extra uh, in 27 years. Are you able to understand? So this is the impact of the inflation on your investment, which is fixed deposit, right? Now I'll shift to the gold now. So so gold has seen 2,099 dollars per ounce. So this is in the ounce. Sorry, I have put it in the ounce. And the low it has seen $252 per ounce. So let's not get into the conversion, all those things, which is not important in this line of topic which I'm talking. So it is simple thing. In the year 1995, if I put 1 lakh rupees, it is currently 5 lakh 59,750 rupees, right? So, for example, I mean, again, so gold has not given any returns based on this calculation. See, if you see here, 5,59,750, and the inflation is 5,80,000, and this is also not tax free. You need to pay capital gains on this, right? So, if you're selling it, if you don't sell it, you keep it like that. I mean, it is the value. I mean, I'm taking as, let's forget about the tax part here, and we'll just consider this 5,59,750. And what is the inflation? So that 1 lakh, whatever invested in the gold, is still giving you the negative returns. So the basic point is This is also not a good sign. I mean, you're not making money out of your own money. I mean, it is eating off your capital, right? But I will not say like a fixed deposit, because fixed deposit has is different and gold is different. Gold, I will not consider to not only for inflation part, or it is a safety aspect. Gold, one should have some gold in the portfolio. Not that for just to make money out of gold. It is only a factor which you need to have. It's a asset class. It's an asset class you should always have. I will explain in some other video about this. But as of now, just think it is gold should not be just, you can say, a safety factor, safety aspect, you can say. So don't look gold as always as a investment vehicle. It's an asset class which will help you when things are really bad. Think like that. So gold is that's why I kept it last, because gold you should have in your portfolio as an asset class. As an asset class, you should have some gold. Certain percentage you should always have gold in your. Yeah. Now the final thing which I will talk about is the Nifty. Nifty is nothing but I think many of you would have seen NSE and BSE, right? So NSE is National Stock Exchange and Bombay Stock Exchange. Here there is a small difference. NSE has around, let's say, 1600, 1700 stocks which are listed in the exchange, and Nifty is not exactly the entire 1700 stocks. They pick and choose the large cap companies and they form the index. Okay, so they've chosen 50 as a value for this Nifty. So wherein there are different sectors involved. So let's say IT, banking, let's say uh, infrastructure. There are so many other sectors which are telecom, pharma. So each has a certain weightage in the Nifty. So that's how we call it as a Nifty, just to say what is happening in other group of stocks. So same sector, other stocks, other companies. So it's you can say it's an index. It's just a face of a Indian exchange. People from other countries, if they want to know what is happening about stock market, Nifty is a Nifty and Sensex is one of the uh, place where you can see, oh, this is what it has happened. I mean, stocks have gone up, gone down. It's 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 an overall view of our entire 1700 stocks, you can say. Not exactly to be precise with you, but I'm just telling you to make you understand a simple thing. Okay, I mean, I'm not talking about any internal part of how it works, how it is happening. I'm just telling you what Nifty is and what it represents. Yeah, it's a better terminology to say how it is represented. You can say majorly all the sectors is represented, but uh, weightage will be different. Okay, let's not get into the too much of nitty-gritties of Nifty. When I will explain once I get into a few things. So, so now, so for example, in the year 1995, yeah, I'll show you. So this is high. High means the index has touched around 18,887, which is recently happened. I think it is in December, recently, end of December. I think maybe 10th or 15th of December, which I don't know the exact date. So this is what the intraday high happened. It's not the closing high. This is the intraday high where Nifty has touched 18,887 and the low is 775. I'm talking about entire thing. Okay. So, for example, so yeah, I will explain everything later. But for this video, which I wanted to show, the purpose of this is how to tackle the inflation. So I'm just telling you only the factors. Okay. So now let's come to this particular uh, thing. So if I've invested 1 lakh rupees in Nifty, okay, not the stocks. Let's assume we have invested in the index. right? This is the index factor, right, which I'm showing. So this index, if you have invested 1 lakh rupees at that time, it is currently 17 lakh 6,000 rupees. So it has gone up by 1,706% in the period 1995 till 2022. So I'm sorry. So what it says, now you see the inflation. So though the 1 lakh rupees uh, has the value has come down to 5 lakh 80,000. Sorry, yeah, it has devalued and it is 5 lakh 80. So if you reduce from 17 lakhs 6,000, if you reduce the inflation, whatever it is, it has eaten up. Let's assume that it has eaten up the capital. Let's assume, yeah. So if you reduce from 17 lakh 6,000 minus 5 lakh 80,000, so how much it comes? 17 lakhs. I'll put a rough figure. Okay, it is. I will not be giving the exact figures. Here we are not doing any mathematics here. Just to understand how much we are making on an average, on the totality front, not exact percentage, all those things. So it is, you are still making after reducing the inflation, it is 11 lakh 20,000. Yeah, you might ask me, there is a capital gain tax. Yes, there is a long-term capital gain tax. You reduce it by another 10%, 10%. So that comes to, even after removing the capital gain tax, removing the the inflation, you are still, your 1 lakh rupees has earned you 9 lakh rupees. So if I add that 9 plus 1 lakh, it will be 10 lakh 8,000 rupees. Approximately, you would have made money. Means you would have earned money. So that is the difference. That is how the inflation plays in your on your money. So many would have felt, okay, inflation is 6% this year. They ignore it. 90% people, they ignore the inflation. So yeah, if you see the recent videos, many big people, even last about my previous video, uh, Mr. Warren Buffett was talking about the inflation, right? So if you compare that video and see the data which I have given you, you will be able to match out. So why people are so worried about the inflation? Why inflation is so major in why it hits our pockets without knowing. Yeah, so this is what I wanted to share. Thank you for listening. Please do like, share, and please subscribe my channel. I will come up this kind of data regularly as and when I find I do some research, then I'll come up with these kind of videos. Kindly support my channel, Rags to Riches, Awesome Finance. I hope please do subscribe. Many of them are coming on my channel and not subscribing. I request them to subscribe my channel. Uh, so I will stop this video here. Thank you so much for listening again. Bye bye.